How do you get ahead in this world? First of all, you get ahead by being very sensible in the finances that you deal with. For example, if someone gave you $10,000, what would you do? Would you run out and buy a new car, or add to your house, or basically spend it all right away? Or would you take the approach of saying, okay, I'm going to take this $10,000 and see how I can use it to generate another $10,000? In other words, make an investment and have it give you something back, rather than, blowing the whole thing on something that you really maybe don't need. Because the key to long-term investing and success is you have to do something with that investment that gets you a positive return. Because once you spend it, it's gone. So let's say you take the $10,000 and say, okay, what can I do as an investment? Well, you could go to the bank and say, give me a CD. You might pay you 1% or 2% a year. Okay, that's a positive return. Or maybe you say, well, I can go invest it in a business. Somebody's, creates a business, and there's 3 or 4 guys saying, let's get together and start this restaurant. The question you get into is, what is the probability that your $10,000 is in fact going to be there in a year or in 2 years, and in fact is going to return some money? It may be fairly high risk. Now, if you're going to do something like that, you really need to understand the underlying business. People say, well, it's a lot of fun to own a restaurant, but what are the financial results of owning a restaurant? Very difficult business to generate any positive return. You have to really have a good location, have a good product, and you have to have good employees, etc., etc. So it's a very complex thing. So investing in something like that may be a little too high risk, and you have no idea in a year what your return is. It's probably negative, and in 2 years or 3 years, it may be flat. In 10 years, maybe you made some money. So that may not be a good idea. So maybe you need to look at investing in stocks, in the stock market. Now, there are different ways you can do that. You can look at what are called mutual funds. You can say, okay, I'll go invest in a Vanguard fund that says they're going to give me a 4% return every year. That's been their history. That's been their average. And for that, they're going to charge you. They might have a 2% fee, so they're actually making more, but they're keeping, a big piece of that to basically invest your money. You're saying, we have costs, we have analysts, it costs us money to invest your money. So you need to be aware of that. There's no free lunch, so to say, when you give somebody your money and they're going to invest it for you. So the thing is, that's maybe better than what the bank will offer you. But is there an opportunity to do even better? Well, you can, maybe take some risk in the stock market and say, well, I'll invest in a new startup. I mean, you always hear these stories about the person that put $10,000 in Microsoft when it first arrived on the scene, or Apple, and sure enough, 30 years later, it's worth $100,000, $200,000. But remember, 30 years later, how many people hold something for 30 years? Very few. It's a really bad example, because I don't really know of very many people, maybe other than